Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at Forex trading at the Forex charts together here in this 1.5-hour session. Glad that you could join us today. Before we start looking at the charts, in fact, this disclaimer explaining that the educational materials are developed by Admiral Markets Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and any other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, there is a disclaimer explaining that trading for exchange at global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. All right, so if you would like to read the entire disclaimer, please, before proceeding with this webinar, write an email to our customer support and they will send you the disclaimer. Otherwise, we're assuming that you are aware of the risks involved and that you are responsible for those risks. Alrighty, so thank you for your attention on that. Today we're going to take a look at the live Forex trading in 5 easy steps. As you know, for those who've been in this trading room more often, you know that we're looking at kind of a mini trading plan here. Of course, not too elaborate due to the time that we have, limited time. But a rough guideline is, for instance, these 5 steps: defining the trend, searching for opportunity, checking if there are any filters, establishing the trigger, and then deciding the entry method. An example could be trading with the trend as point 1. The opportunity could be, for instance, a pullback to a fib. Checking if there are any filters, we could look at, for instance, divergence and tops and bottoms to see if price is close to that. Or that wouldn't be a good example with the pullback, but divergence might be a good example. Step 4, the trigger. So, for instance, the price action candlestick pattern or wick at the fib could be the trigger, but the entry, for instance, could be the retracement of the wick. Make sure to take a look at Admiral Markets in social media. And with that said, we're going to take a look at our calendar today, and then we'll head over to the charts. So go to admiralmarkets.com and click on education and click on webinars to get an idea what you can sign up for this week. Today we're going to be looking at trading confluences on multiple time frames. Tomorrow, supply and demand. And Thursday, plan your trade, trade your plan. And in the evening, we have a special webinar with Tarantula monthly targets and system expectancy. Alrighty, so let's take a look at the calendar. This week we have the Fed Chairman Yellen is testifying, so that I can imagine certainly will have its influence on the market. I'll be very curious to see what will be said in this event. So I'm sure the market will definitely be curious as well, or the participants of the market. Let's take a look at the rest of the week. We don't have anything in our session apparently. It's a quiet day for the Eurozone. Tomorrow we have big news on the pound inflation report, and we have ECB President Draghi speaking. Aussie news on Thursday plus USD news, and again Yellen testifying. Alrighty. All right, let's take a look at the euro dollar as usual. Start with that one. Let me just check one thing. I don't think I have my drawing tool open. Sorry for that. Alrighty. So euro dollar is making some upside after the kind of a bit of weaker NFP rate. The unemployment rate fell, but the NFP figure was again lower than expected, second time in a row. So that's not much of a stimulant or confirmation of good employment growth, unfortunately. But therefore, the euro dollar going up on Friday and getting some continuation. However, this upside is looking a bit corrective to me. I mean, it's moving up, but it's quite choppy, and in certain way, it's almost looking like a rising wedge in this regard, like that. So looks pretty corrective to me. Now, it doesn't have to be necessarily corrective. I'm not saying it could definitely, for those of you who are bulls in the euro, I don't want to pop your bubble. It could definitely still be upside. But I would like to see a break of this trend line, because then we know that there's more space to the upside. This rising wedge normally is a bearish signal, but in some cases the rising wedge is just a consolidation, and you do get a break to the upside. So in this regard, there could be potential for both sides in a way. Let me put on the moving averages. You can see the angle, though, of the 1 hour band here, the black band that we have on the chart, is pretty steep. So maybe it's not as corrective as I think it is. This part especially looks corrective. This was a pretty good impulse as well, of course. So in that regard, this could still be upside indeed. If we look at it, this could be just a correction, maybe some kind of correction, and now we're moving up like this. That's possible. That's one scenario. Or if we do break the black band, then there's probably more downside coming. So for me, this black band is pretty important. If we stay above the black band, there's pretty good decent probability of going up on this 1 hour chart. But let's take a look at other time frames, because this is a multiple time frame webinar, although we always look at multiple time frames, but I wanted to emphasize it more in this session. So we broke out of this line to the upside. We broke out of this line even to the upside. So there's no resistance trend line left. The only thing we can still put on the chart is, of course, this particular horizontal level, which is still a resistance. Obviously, it's a top. It's a daily top as well. Look, if we zoom in or zoom out to the daily chart, this is a top on the daily chart, right? So there could be some space up to that. If we break the red top, then there could be some more space up to challenge the next resistance, which could be this line around here, roughly speaking, or the top, of course, right there. So there is some space in between those red lines, as you can see. That would be the space that traders would want to dive into catching. As we said, the price was back at the green band. Remember, that could be a bouncing spot, just like here and here. And what did you know? It happened again. Markets are definitely repeat themselves, don't they? And are known for repeating themselves. That's why technical analysis makes sense. And we had a good bounce here, basically from the daily point of view. Now we're trying to break out of this black band. The black band is kind of like inching with a very weak angle to the downside. Last time we didn't manage to break above it. Well, we broke above it a bit, but then came crashing. So that's the question. Is this going to be a full break and go, or are we going to bump in this resistance and then make it downside again? It's a break or bounce spot in a way. Weekly chart, I don't think we have to talk about it that much. We know that we're in an uptrend, but that there's a resistance line coming in, right, from the monthly chart. Let me show you this resistance line here. All right, I think everyone should know that by now if you've been here more often at least. Then the question is this a bounce for downside, or would the uptrend be strong enough for price to break through that resistance line? Right, that's the question. And the answer is taking very long, unfortunately. Why? Well, because if you look at this particular if you look at this particular zone, well, we're in here basically since end of September, which is October, November, December, January, roughly 4.5 months. We've just oscillated between a couple of hundred pips here and gone sideways. Recently, we had a mix of up, down, up, down, up, down, up. Very choppy price action. But from a weekly perspective, this could still be a higher low. Right? Plus, we had a bullish week last week, as we know. So to me, to put it basically, to summarize it, I don't want to make it too complicated or something like that, but what I would summarize it is potential bounce off of daily/weekly support, and there could be follow through, a breakout potential to retest these resistances. Now there's not a lot of space here, but that breakout trade could have a potential to move up in phases like this. Any of those resistances, though, might send the euro dollar again down to the bottom of this wedge, right? So there's not a lot of space here, as you can see. But there is some potential breakout to the upside with limited, space before we bump into the resistance. If we break those resistances, if we break those red lines, if we break the orange trend line there to the upside, then we should have more space, because then the bigger weekly breakout is occurring, and then we should have space up to 143 eventually. I mean, it's not going to go in one straight move, right? But the eventually target, in my opinion, unless I see signals that the target is changing, would be 143-ish. But that's only, that's only above this last red line here, right? So that's, there's a while to go before we get there. So we'll talk about that when we get there, I guess. For the moment, we're looking at the bullish breakout to the upside. So let's zoom back in. We've now looked at all the time frames, I think. 4-hour chart, the black band is pointed up, and price has recently pushed through the green band. Price action is bullish. We only see blue candles here. So once again, we're analyzing this breakout. Does it make sense to trade this breakout right here, right now? That's the question, right? We analyzed on the higher time frames that we're having a breakout. So the question is, can we trade it, or are we interested in even a counter reversal trade maybe to the downside, even though we have a bullish breakout? You never know. All right. Looking at the 4-hour chart, I'm not that interested at the moment in a reversal trade, because I don't see any 4-hour divergence at the moment. Maybe there's, no, I don't. There's bullish price action, so I don't see any need for that. But let's take a look at the hourly again. And we come to the conclusion again that the hourly is making this kind of strange move up in a way, like this, but price is still above the black band. So any downside, once again, for me, would only be interested if we break this black band, hook back to it, and use it as resistance. Then I would be interested in the downside. That's the really only time that makes sense to me, right? Because if price pushes through the black band, then starts to use it as a resistance, the black band will turn and have a downward slope. You see what I mean? Anything earlier than that, I think, is risky, in my opinion. That would make sense to the downside in a way, because we have more confirmation. What would be the target of that downside? At first, the target would be the green band, in fact. That would be the target of that downside trade. If price pushes through it, then the next target would be the orange trend line. That's the reversal trade once we push through the black band. Target 1, target 2. Now let's talk about upside, because price is still above the band. So upside, as I said, don't like the choppy correction here. So even though there is a bullish breakout at the moment, and price is above the black band, I don't like the, as I said, the formation for upside, and we want more confirmation of that upside. So one way of doing that is waiting for price to move back to the black band. That is always a potential support. It's also this trend line kicking in potentially, right? Price could find support at, first of all, the broken 4-hour trend line. There's confluence here, right? We have a 4-hour broken trend line, plus we have a 1-hour support line right about, what is it, 136.40? That could be a bouncing spot So that would be interesting. Or if price were to accelerate above the orange line here, and then start to make a hook back, a smaller hook back on the 15, then I would be interested in a breakout continuation to the upside. I think those are the scenarios we can think of here. Right, so this looks like a nice confluence level here. Let's take a look at the Camarilla indicator to see if we get any confluence from that particular indicator. Not really. Let's see, the L3, well, a bit. Yeah, I said it too soon. The L3, right, which is the Camarilla level, which is used for support, is at 136.34. So it's only 6 pips, away from what we said is important. So that's not too bad. It's pretty. I mean, 6 pips is very close. Okay, so that makes sense. At the moment, actually, the H5 has already been taken out. That's funny. Price stopped right there at the H5. Do you see that? So how about the pound? Let's take a look. The pound is close to the L3, and the L4 is at 163.77. There's not a lot of space. You can see that the Camarilla, the spaces between the Camarilla lines is very small. There was not much market action recently, because otherwise, the tighter the Camarilla is, basically the less movement there was in general. So yeah, that's what I think about the euro dollar. Waiting for the break. Once again, to summarize, waiting for the break of this line, waiting for a break and kind of a bull flag for the next break, or if we move back towards support, back to the broken green or the orange line here, which also the 15-minute green band, you see that, right? Another confluence, then would look for confirmation of a bounce at this level. So with that said, I don't want to stay too long on one pair, but let's move on to the dollar yen, for instance, and we can take a look at the pound dollar after that. So we had recently a 50% bounce at the 101 level, and price has been moving up in this channel ever since. The channel itself looks pretty slowish to me, but it is still a channel. Price is above that channel, or in the channel, and it's moving up. So there is reason to believe this could be an uptrend channel. Also, we broke out of this resistance line. You see that? So after the 50% hit, right, we hit the 50% here. We had a mini double bottom and then a bigger double bottom, kind of like a triple bottom here. And then we broke out of that resistance line, and then we started to make this upside. So classical turn and a classical bounce and continuation so far. Will we for sure get a follow through? Well, we don't know. But as long as we stay in this black uptrend channel, I don't see any reason why to change that particular view. If we break this uptrend channel, obviously then this was probably just a correction, and we could see some downside. What would be the target? Well, at first we still have to be careful of this bottom. But if we break that bottom, then the 618 at 100 would 61.8% Fibonacci retracement level of the entire daily upside at 99.95 to be precise, would be the next target of this downside, because this could be the bouncing spot. Just like price stopped at the 23.6 and the 38.2 and the 50 fib. But the previous two fibs, The 23.6 got some bounce but didn't get follow through. Got some bounce but didn't get follow through. Is this the same, or are we indeed bouncing for bigger movement? So let's investigate that. Okay, we don't know the answer, but as long as we stay in the black up trend channel though, as I said, there's no reason, in my opinion, to be bearish as yet. I would only become bearish if this black uptrend channel breaks. So let's take a look at the weekly chart. Now, we have a trend line here. From a bigger time perspective, we are at a resistance line. And this weekly trend, basically, uptrend, has brought us to a monthly resistance. So the question is, are we able to break through that? If yes, if we are able to break through this orange line and this top at 105-ish, 105.40 I think, there is a potential to go up to the minus 272 target at around 111, sorry. All right. That would be a great potential, great space here. That would be a great trending trade probably. If we then zoom into the weekly chart, what do we see here? Wait, there's one more thing I wanted to show you, in fact. If we look at this weekly chart and zoom in a bit, right, I show you the big fib, right? I show you the fib on this very, very steep impulse momentum thrust. Oh, let's see. Hello, testing. Ah, good. Thank you. Thank you for that confirmation. So that's what I wanted to show you, is the weekly pin bar basically off right at that 50 fib. That is a bullish price action signal. That is a confirmation of potential upside. That is a signal that is more, shows more bullishness than last week, which had actually just a very small candle, bullish candle, and a big wick. Right? Didn't really seem like a convincing bounce if you look at the week from the weekly perspective, at least. This is looking better. There's a big tail at the bottom, so that's more promising. Therefore, as I said, if we do break that channel, then there is a potential to short it, but watch out for that bottom, because that could still be support. Because of that weekly pin bar, the last week's low could definitely be a support level. So something to think about. Daily chart here is seeing some bullishness, and obviously, although we are getting a bounce off the green band of the daily chart, which itself has acted as support here and here and here and here as well, we do have resistance again above us. So does price have enough momentum basically to push through that resistance on the daily chart? And price would need to break above this particular top here, the last daily resistance, at 103.40. If we break 103.40, then we're also breaking the black band on the daily chart. So I wouldn't be surprised to see a move up to that level, see a respect, and then maybe a breakthrough up to the next resistance, which in fact is this space right in here. And you can see the 4-hour chart, the price is, it's a bit of a mixed picture here on the dollar yen, to summarize it, because we got all these various flows going on. We have a daily bounce, right, at support, but then we have resistance above us, right? We have a weekly pin bar, that's good, but we have weekly divergence. So it's not an easy picture here, I think. The dollar yen is in that uptrend channel on the 4-hour chart, but then again, and is above the black band, but it's still below the green band in a way. So that's not the easiest scenario. Let's take a look at the hourly. Hourly price finally managed to cross all those moving averages, but the moving averages are flat, which doesn't indicate an angle, right? It doesn't indicate a strong angle. Look, when we had an angle here, that was good, right, for the upside. But over the downside, we had a strong angle here. That means there was a trend going on. It's flat. So all in all, I would basically stay out, if I would be honest with you here, and as I always am, by the way. But I don't think it really makes sense at the moment. I would wait for more confirmation. I mean, if the moving averages are set for bullishness in the sense that black band is above the green band, price is above the black band, right? They're all lined up. So if price does bounce here and start to break this trend line, if we connect these two tops, I would be interested in looking for potential longs up to 103.40. That looks pretty good to me, but not now. I would want that confirmation. I would want to see price break through it. I want to see it stay above that orange line with a good 1-hourly candle, for instance. See it maybe a small mini bull flag on the 15 or 5-minute chart, and then the next break, that would make sense with maybe a 180 pip target to the upside, something like that. That makes more sense. But not now, because we don't have that confirmation as yet. Moving averages are flat, so I would rather wait for that. In that regard, if we do confirm, then there's that potential on the daily chart basically to continue up to that orange line, roughly speaking. And we would make this continue, this arrow here. And we'll be targeting this resistance here, the blue line, where I have the blue line, okay? We want to target that because after we hit that level, we can make a next correction, and we don't want to live through that particular trade, or we don't want to live through that particular consolidation. And when that consolidation is finished, there could be another breakout trade up to the next resistance potentially, right? There's always a potential to rejoin. It not always happens, or because we maybe miss it, but I don't think you want to live through that potential correction either. So, or at least I don't want to. So that would be the target. So downside, that would be the bullish version. The downside is also not interesting, as I said, because the moving averages are flat, first of all, but we are also in this uptrend channel. So that means that for me, bearishness, as I said, break below this channel, and the target would be these bottoms. Actually, I would be even scared to aim for those bottoms. I would put a fib on this entire upside, and I think the 78.6% Fibonacci retracement level at about 101.20 could already be the bouncing spot, for instance. From an Elliott wave perspective, this could be maybe a very choppy wave 1, and then we could have a wave 2. Waves 2 could easily stop at a level like this, even the 618 potentially, but so downside only upon the break of the channel and then with a limited target. Alrighty, let's take a look at pound dollar. Pound, well, it's also kind of choppy. So The reason why, well, you can already look at the 4-hour chart and you see why I say it's choppy. Look at this. It's really, it's altogether, it's just going sideways. And we could see that easily on the daily chart here as well. And price is, funny enough, it's actually, if you look at it from this perspective, we had a very strong trend here. Then we got a massive bull flag. And then we got a break, pullback, continue in a way. So is this a second hook back for more upside? Or is this just a correction for a bigger retrace? If you look at it, we do have about double daily divergence. So between these tops, and we broke out of this support line. So this could be a break, pullback, continue for downside. However, we are still above these tops and still above these bottoms here. These tops, right I have the green line right there. They became support in the future, right? And still are acting as support. Plus, the pound dollar is pretty complicated, so we'll have to spend a lot of time, I think, on this one. Well, depends how complicated we want to make it, but this was also here, all these levels, very important level here at 163, right? 162.50 in any case. We also have a weekly trend line here. Look at this. This weekly trend line coming in and breaking and acting as support as well. So we're basically stuck in a hard spot. We have support right below us, and we have weekly support, and we have weekly resistance right above us. So no wonder price is that choppy. It can't choose. It has equal support and resistance of equal importance above and below it, and it's bouncing between those two levels. So obviously, in that regard, a break of these support levels, there should be space to fall down to at least to test these bottoms. If we break those bottoms, then down to the 38.2 fib, and then maybe more downside to test maybe this lower purple line eventually. Although there could be some bigger bounces here, of course, as well. But initially, the first downside trade here, let me make that extra thick. This thick arrow there, that would be the break to the downside. All right. Upside weekly break would have to be above, right, the weekly resistance. So, of course, that's initially kind of the most important line on this weekly chart. But price could stay within these weekly support and resistances for quite a while. So before we get that break to the up or downside, that could take time. So let's zoom in and try to maybe make an estimate which of the two is more likely. Do we get the break to the downside or the break to the upside? It's probably difficult to tell which of the two will happen, but maybe there's some trade in between these tops and bottoms, in between this chop, in this range. Basically, this is a ranging environment at the moment. All right. So although we have some signs of reversals as well going on because of the daily double divergence between these tops, the break of the support line, for instance. So with that said, let's zoom into this 4-hour chart, and I'll put on the moving averages. All right, and we can see that the green band was used as support. Now, will it be resistance? I think there's a good chance that it could. Also, if you look at it, we have a very strong 4-hour AO reading to the downside. So the question is, we're at a bounce or break spot, basically. Is this just part of the correction down, and do we get more? Or do we actually, was this just a correction, and do we actually now start to break up? So this green band is pretty key, in my opinion. Let's take a look at both scenarios, because both, I think, are equally possible, equally interesting in a way. So the next phase, the next step would be to put the confirmation lines. At what point do we have a confirmation of downside, or do we have a decent chance of getting confirmation to downside? At what point do we have that for upside? What are the main lines here? In my opinion, this bottom right here is a key level, If price breaks above it, then this is not looking like a bearish impulse anymore. All right, at the moment, what I'm thinking of is that this could still be a wave 1, 2, 3, 4, and go down for 5. Now, I know that some of you who don't like elliott waves are now rolling their eyes and thinking, oh my, not another elliott wave story. I try to minimize it for those of you. But in some cases, knowing even just the basic structure of waves can help. And in this case, it's pretty clear that this could be a 1, 2, 3, 4, 5, or it could be an ABC. You don't have to be a wave expert to know this, right? It's pretty simple. And what is the confirmation is the end of wave 1. And that's the bottom right in here. So if we break that level, that's pretty important. That's an important bear bull line, right? It's a pretty straightforward structure, I think, in this case. So why not use it? If we can see that clearly, why not, right? So that's the level. If we break there, there's a potential for this to retest at least these tops, which is the next resistance. And maybe if we break above it, to test the weekly resistance at 167.30. If we don't, right, then we can put a fib on from this top to this bottom. We can see there's a 50 fib price kind of stopped there, pretty close by. And well, if we respect that 50 fib, the target would be the minus 272, for instance, at 161.50, or the minus 618 at roughly close to 160, 160.20. Now, how do we know that we have downside or upside, right? The downside is still questionable because we are making higher highs and higher lows on this 4-hour chart. And we did bounce at the 50, so if you took a sell it there, you'd fine, move it to break even and hang in for a bigger ride. If you're not in that trade, then what would be the confirmation? Well, this 4-hour bottom is important, plus the black band is important. Break below there, that would be one of those confirmations. As I said, upside confirmation, I would want to see a break of these tops, break through the 50, this level here, sorry, and a bull flag, and I'll gladly take the next break. That would be the upside scenario. I wouldn't enter as soon as price goes through the red line, right? That would not be the entry method. It wouldn't be the entry signal to me. But if it does break the red line, then I would, it would be the trigger in my opinion, and I would be looking for some kind of smaller bull flag to take the next break of that smaller bull flag to the upside. So that's the upside scenario. I would not be looking to take a break of these tops because I would, that it's possible maybe. There is some space here. I would still consider the 618 fib, by the way, an important level. If price does stop at 61.8, sometimes in highly leveraged markets, you do get an overshoot where price just goes a bit into price action. So I would be a bit more conservative and say we want to see a break of 164.90, 165 probably, right? Okay, let me adjust that. Because if we do touch 61.8 and then start falling like a stone, then those few pips of overlap is in a highly levered market, such as the Forex, okay. So yeah, there could be some upside from this particular top, this 50 fib, to the 61.8, and then once we break the red line up to the 78.6, basically. Downside, let's talk about downside now. Oh, Bob is saying, he's asking if there's not a bull flag. Let's see. Well, the bull flag pattern is a corrective price action pattern, okay? So in this case, I wouldn't call it a bull flag. The bull flag is something where you have a strong impulse, either up or down, and the subsequent correction is corrective of nature, which means something like this for downside, for the upside bull flag, or the bear flag scenario would be something like this. And price action, when making that counter trend move, doesn't go too far. Typically, what you would see, price will go to, for instance, a 23.6% fib, or 38.2. Or the 50 fib max. The same for the bull flag. Oh, sorry, Bob is talking about the last candles. Well, in that case, it wouldn't be a bull flag, but a bear flag, I guess. You see, because why? Because we have the impulse prior to it to the downside. The last 10 candles. Oh my, sorry. I'm not, I see your point. You mean this part? Yeah, that's possible. Indeed. That is possible, although the top got broken here. But it is some kind of correction indeed. So I totally agree with you on that one. It's not a bull flag, but it's some kind of, corrective pattern where we could see a potential for upside indeed. We've had some moves up here and now correcting. So if we break above this line, this black line on the 1 hour chart, right? So that makes sense. Good observation, Bob. So let me take this off. We're actually at a resistance line as well, in a way, this downtrend channel. So let's go back to the hourly. So upside, alrighty, upside makes sense. We know now there's confluence. We have, first of all, this 4 hour channel. Let me make that a bit different color. We have this 4 hour channel, this blue. That's resistance. If we break there, that would be one confirmation for upside. If we break above this shallow channel and the 50 fib, there's breakout trade up to the 61.8 and then potential continuation above red. The downside, we would need a break below this channel for a short trade down to orange, which could be a bouncing spot. And then a bounce. And if we break that orange line, that support line, there could be more downside confirmation. And we would continue with this downtrend channel of blue. Yes, a bull flag is always pointed downwards. That's why I said this is not a bull flag. This is some type of correction, but it isn't a bull flag because indeed the bull flag would be an upside with a downward flag, and the bear flag would have a downside indeed with an upside flag. And the bull flag would not be up with an upside flag indeed. Indeed, that's true, and that's why I said this is not one, but it is some kind of correction because price is consolidating, right? So that's why we want to break of this top of this black line. A rectangle, yeah, it could be. Let me check. The difference between the tops are about 15 pips. There's very marginal difference between these tops. So I wouldn't mind considering this to be indeed a rectangle, or it's a flat in a flat correction where we have a 3 move down here, a 3 move down up here, a 3 move up there, and a 3 move down like that. So there's some small downside here, but what I really like more is a break below orange for that downside confirmation. And we would continue with this downtrend on the pound dollar, like this. Something like that. So these are the most important lines in the sand. I do think that the upside is risky. I'll tell you right now. Even though there's an uptrend on the 1 hour chart. As soon as we break the top, there is divergence in play maybe. So this break could be very choppy. And although there is space to the 61.8, the question is, will that space be filled as fast as we would like to have it when price breaks it? I don't know how good that chance is. It could. I mean, I'm not saying it's impossible, but I don't know how much I like that particular trade. I would probably not take that. Or unless I really see a good 1 hour bar pushing through it like that and some 50-minute bull flag, maybe then the story changes. Downside, I like best below orange. The break of this black line here is a bit, could already have its limited, limited space basically. So that's the pound dollar. How about the Aussie? The Aussie, in fact, is continuing up, which is a bit surprising to me. We did have divergence on the hourly chart, and well, the divergence really, we know that the target, right, when we have divergence between the tops, right, or bottoms in any case, doesn't matter. When we have divergence in general, the target is the green band, right? Now, in this case, we missed the green band. That sometimes can happen. I warn you, it's not exact science. The difference was about 10 pips. So this hourly divergence played itself out, roughly speaking, and we're getting a bounce off of that level. But the entire upside is kind of surprising me a bit because of the bigger weekly downtrend. So, but in this case, there's apparently a potential now to go up, in this case, to test this resistance. So for the moment, any hook back should see follow through to the upside. All right, because this hourly chart, we got a bounce here. The problem only is that price has moved away already a pretty decent amount. So as I said, I would like to see some correction before a bounce up. But this is definitely a strong uptrend here at the moment. We had a good correction here, a triangle like this. And we're seeing a break above the black band. Black band is pretty nice angle, right? Strong angle, sorry. A steep angle. So I would like to see price move back to that black band and bounce. The target of that bounce, as I said, would be the daily resistance here at around 90.86, which is also the 382 fib of this entire downside. So that would be the target. If we break the 38.2 fib and break this top, then the next target would be the top of this green band and the 50 fib at 92.10. And we could see that continue there. From the weekly perspective, the 90.80 is also a target. Why? Because there's a weekly resistance level right there. And not only that, it's last month's high. And we had 3 bearish candles. So all this bullishness could still be just a retracement to test last month's high, and we get a close in reverse, and this falls again, down to 84, for instance, which is the minus 272 target of the fib we just put on the chart. So for me, there's some intraday bullishness that could make sense to capitalize on. But from a long-term perspective, I would definitely want to close profit relatively close to that 90.86 because we see sufficient confluence on multiple time frames to know that that upside could easily stop at that resistance. And not only that, not only stop, but potentially turn, reverse, and fall like a stone, potentially, to the minus 272 target. Yeah, no problem, Brian, no problem. The green band is the moving averages, the 2 moving averages I have on the chart, and they're 144 and 169 EMA closes. I'll write it down for you. The black band, that's the green band, okay? The black band is 34 EMA, close, high, and low. I definitely encourage everyone to use it. It's of great value, I think, this information, because it really gives a good clue of, a lot of things, in fact. The angle, the trend, the momentum, the potential breakouts, reversals. It really gives a ton of information. So let's see. That's basically it. So I propose to one thing, by the way, is that because we have divergence on the daily charts between these bottoms, and we are above the black band here, there is a chance to go back to the green band. Okay, so that we have to keep in mind. It could be either this or this. Both could be the turning spot. It doesn't have to be the 38.2 necessarily. So now down to the 4-hour chart. With that in mind, we know that we're actually, this with the trend breakouts are actually reversals on higher time frames, so we have to be careful with the TPs. And down to the 15, and we can see that on the 50-minute chart we had a very strong impulse last night, in fact, which was probably triggered by some Aussie news. I'm not sure what the news was, but I was sleeping at that time. But we had a very strong impulse. We got a bull flag here and a break of that bull flag at the moment. So any hook back to this pattern, and we could see this could be a supply-demand zone. What we'll talk about tomorrow. We have the black band here as well. Any move down to these tops as well could be support level. I wouldn't necessarily, bet the farm on it, as I would always not recommend to do that, by the way. Always split your risk, right? But in this case, I would still wait for some confirmation, but there is a good chance that now that we've broken the psychological 90 number and these tops, that when we do hook back, that could be the bouncing spot. So that's what I would probably be waiting for, a hook back to that level to see that upside. Kiwi, not too interested in the Kiwi at the moment. It's just a lot of choppiness. Looking at the 4-hour chart, it's more of a range. It's definitely more of a range. I mean, it's a range within the range. We have this range within the weekly triangle. So let me show you that again, just in case here. The green lines are the weekly triangles, what I put on the chart, and the inner magenta ones are the kind of like the short-term, consolidation. So within that consolidation, there's a lot of ups and downs. I don't know. I don't like trading those ranges. It's more difficult to predict, in my opinion. But I never focused on them too much. But let's see if there's anything that makes sense. Well, if anything, I guess there could be still some upside continuation to challenge this resistance, but I don't really like the whole structure that much. There is some channel going on here. There's a resistance line like that. I guess that's, at best what we can add to the chart, and then we see that we're pretty close to resistance anyhow. I guess if there's some kind of bull flag like this back to the bottom of that channel, it could still be an interesting bouncing spot, but that will not happen in our session, so I would suggest to skip this one for the moment. Dollar Swissy. Broke this descending wedge to the downside. Pretty neat descending wedge. Price was well below the moving averages, as you can see here. And we got a classical break, pull back, and go. This happened during my night, but Nothing at the moment though, at least as far as I see. Prices back at the bottom, not too interesting in a downtrend. Not if you are looking to short it and looking to go long. Would only make sense if there's a clear, strong level. And looking at this, I wouldn't say so. We broke out of this support, and we broke out of this triangle to the downside. That doesn't encourage me to be going along with all the moving averages on the 4-hour chart red and down, pointed down. So we're definitely in a downtrend. We broke out of a triangle to the downside. I don't see any reason to trade this to the upside. But if we want to trade it to the downside, we realize that we're right at support. So we're at a bottom, right? So that doesn't make too much sense. How about the dollar CAD? Dollar CAD at a potential breaking spot of this correction. We need to break orange and then the red trend line, the red horizontal line for breakout to the upside. That looks pretty interesting. And I like this dollar CAD break potential, right? The dollar CAD on the 4-hour chart is definitely an uptrend. Look at this. Upside, correction, upside, pullback to the green band, which is now acting as a bouncing spot. Plus, if we put a fib from top to bottom here, we can see, bingo, 38.2 fib bounce. So this could be the bouncing spot for the CAD weakness to continue. And the confirmation of that would be a break above orange and red. So this looks like a clear CAD weakness continuation potential if we break orange and red. And I like that. That looks probably one of the better ones so far, what I've seen looking at what we've looked at together so far. So if you look at a daily chart, you can see a very strong trend going in play already for a while. We had a recent acceleration from price using the black band as a bouncing spot. And look, black band, bouncing spot, bouncing spot, bouncing spot. The angle of the moving averages are very steep, and therefore the 38.2 is a logical spot. So everything basically, we broke weekly resistance. Everything here at the moment is pointing to a potential upside continuation, I would say, on the dollar CAD. And that potential looks pretty good to me, the best so far. So there's just a small space here. That's not too much, but if you break red, there's more space. That looks good. So that was an easy one. If they're if they're trending, it's easier than if they're making complicated consolidations like the pound, and then it's a bit more. It takes a bit more time. Mason asked a question about the dollar Swissy. If we saw a descending triangle that is similar to a falling wedge, which way the price should go? Well, they shouldn't be similar. There should be some difference, right? A descending wedge has a roughly flat bottom and has lower highs like this, right? So, and when price makes that, right, those are the trend lines. The red lines are the trend lines, right? This is the pattern of a descending wedge, and then it should fall like this. That's a bearish signal. Whereas a falling wedge would look something like this. The bottom line wouldn't be flat, right, but would have an angle, and the top line would have an angle like this, and price would be making something like that. And the highs are getting lower and lower, but the lows are not going as far. And that would actually have a potential bullish effect. But sometimes there's also cases, of course, where you do still get an acceleration right away. But I remember on the Euro-Yen uptrend in 2012, beginning 2013, the Euro-Yen was making rising wedges, but the trend was so strong that it just kept pushing. So that would be the difference. In fact, technically speaking, this formation, I'm not sure if it is a descending wedge. I said it, in fact, but Well, in this case, the difference between these bottoms is only a couple of pips. So I would be willing to say it is a descending wedge, but you could also look at it as a contracting triangle. Although the thing is that this looks more flat to me, and this is more pointed down. The contracting triangle should have more something of this formation, right? And we can see that these two are not really the same. This looks more like a descending wedge to me, which is bearish. But mind you that even though price makes a descending wedge pattern, all patterns do not necessarily break in that direction, right? Just like I said, a falling wedge pattern, sometimes you do see the acceleration to the downside and not the bullish break. A descending wedge sometimes, actually you do see price break to the upside, break this top line. In this case, we got with the chart pattern break. So what else is going on? Euro yen breaking to the upside. Odd yen is moving to the upside. Pound odd to the downside. Pound odd had a daily divergence, right? And the target of that could be the green band. So now that we broke below the black band, the pound odd is could be potentially continuing in this downtrend to test that support level. Where's that support level? Let's take a look again. 176. All right, so could make this fall right in here. Yep, dollar yen indeed attempting to break, but mind you that I'm not personally looking for a break of this orange line, by the way. Just to let you know, okay? What I'm looking for is a break, a small bull flag, and the next break, personally. The reason why is that I don't like these flat moving averages, so I don't trust the breakout as yet. I would trust it more if we get a break above orange, of course, with a good hourly or 2-hourly candles, and then see a bull flag on the smaller time frames. Then a break of that is something I would like. Otherwise, I'm a bit hesitant to take this break because the flat moving averages could mean that the break could turn into a wick and we see price move back. We see a false break and then a move back to support and then a move up. So I want a bit more confirmation on the dollar yen. The euro odd is also in a downtrend, just like the pound odd. So there's some odd strength against the euro and pound as well. Pound yen is same like the euro and it's trying to break up. Moving averages are flatter than the euro yen, so the euro yen looks a lot better. Euro New Zealand is choppy as well, just like pound New Zealand is. So I'm not too interested in that. I won't waste your time with that. XAU is trying to break to the upside, interesting. Dollar index is approaching support. The CAD weakness is fully in play indeed. So pound CAD could be interesting, but then again, if we look at, for instance, the euro yen and pound yen, we know that the euro yen is doing better. So apparently the euro is stronger than the pound, but we can check the euro pound, which we haven't done yet. And you can see that the euro pound indeed is above the moving averages. So maybe, I like your idea of the CAD, but maybe the euro CAD could be better than the pound CAD. Or maybe the odd CAD actually could be better because even the euro odd is moving down. And if we have CAD weakness, right? If we have CAD weakness, let me make that red. We should find the strongest pair and connect it to them, right? Or try to do that. So pound seems to be the weakest. The euro seems to be the runner-up because the odd is actually beating the others. So this odd CAD could be an interesting one indeed. Let's take a look at that. There is a resistance line close by, so that of course is something that could cause the price to stop and pause. Within this 4-hour world, we are in an uptrend. We talked about it already. I remember last week that this was a big consolidation. We broke, pulled back, and continued. So we're doing that right now, and that we're in the continue part. The resistance is pretty close by. So yeah, that in theory would be the nice combination, but there is no space at the moment for us. In my opinion, I don't like to go long right in front of a daily top. That's one of my rules. The only thing that could change it is if we make a pretty decent correction and get a bounce, then things could change. But other than that, right here, right now, no. So let's take a look at the pound CAD now. Pound CAD broke out of this consolidation to the upside, indeed. There is a small consolidation right here. Which means that if we break this fractal, we could continue with the uptrend indeed. Yeah, so that's the potential. Indeed. Pound CAD upside. What would be the resistance or targets? We could use a fib. I think maybe on this one here. You can see why price is stopping here because it's a minus 272 target. So the next target would be the minus 618 at 182.66. But I wouldn't be surprised because we just broke out of the black band to see some retracement back to the black band and then a pullback basically before we continue. So with that in mind, let's see, where could we continue? We could continue, remember, broken resistance becomes potential support. So anywhere basically, let me make this green. Any hook back to these tops right in here is a potential zone of support. Why? We have broken tops, many of them in fact. We have kind of a zone here. We have the black and green band, and this could be, as we know, a pull break, pullback, continue. So anywhere in this 181.25, 181.50, if we get a confirmation, once again, I wouldn't want to just take an entry right there. Well, it's possible, but it's riskier, of course, as always. But if we get a confirmation in that zone, there's a potential to bounce from this level up to the minus 618 target for potential 140 pips there. But I would definitely wait for confirmation of some price action signal. There's also the green band here. Odd is even beating in New Zealand, as we can see. It broke, or depending on how you draw the trend line, it either broke. This one, we still have maybe one trend line left. That's this one right in here. It's even breaking through that. There's nothing wrong with drawing multiple trend lines, by the way. All right, because trend lines are a rough approximation of price, so there's nothing wrong with trading multiple ones. Or having multiple ones on our chart. So the odd New Zealand, in fact, looking like it's breaking to the upside. We already had a pretty sturdy upside here, so looking like we can continue with that to test 110. Let me just adjust these lines. Give me 1 second, folks. It could be in an uptrend channel, something like this, roughly speaking. And we can see that price retraced from the top of the channel to the bottom of the channel, now trying to break out in this uptrend on the 4-hour chart. This is an uptrend on the 4-hour chart at the moment. So yeah, I don't trade the, I haven't traded out New Zealand in a while, but that looks like a pretty decent potential for the upside to continue here. Let me take a quick look at some other CADs, maybe the EuroCAD. EuroCAD was pretty choppy as well. But did break, out of all the resistances that I can see at least. Whatever trend line we put on, it's broken. So, here too, just like the pound CAD, there's a potential for price to pull back to support and then bounce off that support from our upside. Well, folks, that's really, I guess I've looked at all the pairs that I wanted to look at. Do you have any questions or pairs you wanted me to look for or at? Otherwise, I guess we'll wrap it up. I don't want to hold you up, and time is valuable, I understand. So I just want to take a quick look at the euro. Euro made an upside, but is hitting that resistance line. As I said, I want that resistance line to break the euro dollar. Otherwise, not trusting that move up. Yeah, let's take a look at gold indeed. Let's see. XAU-USD broke the resistance line, broke this green channel down, right? Or let me make it red. It'd make more sense. Broke this channel, red channel down. All right, so to the upside, and basically broke the top as well, the 1280. So with that top broken, we already realized that this could be a double bottom. This could be an uptrend, although choppy here, and it seems like we're trying to accelerate away from this kind of slower paced upside by breaking through resistance. Of course, that's already a major thing. And we already had a break of resistance earlier of this resistance line. Let me make that a bit different color, like brown. All right, that was already the first signal, of course, this falling wedge pattern as well. Now we're getting the continuation of that upside. The target would be 1305, there's a minus 272, and then 1340, which is a minus 618. The 38.2 fib, in my opinion, would be the next target at 1414, which is also this top right in here. If we break that level plus this top at around 1420, we can go to 1490, which is the 50 fib. Then eventually it's 1526, which is this bottom here, which will become resistance. If it's oversold, maybe. It could always retrace. I'm not saying that just because it broke the top, I would be a buyer immediately. That's for sure. I'm just analyzing that there are higher highs and higher lows, and that we did break resistance. So officially, technically, we are in a breakout / uptrend. But let's take a look indeed if it's worth. Is it worth trying to trade it to the upside? Right? Is there an entry? Where would it be? That would be the next step indeed. So let's take a look at this hourly. Let's see. Let me put the moving averages on now. Pretty steep angle. I wouldn't, scalp sell, let me put on the CCI. Oh. I wouldn't look for it as yet, personally. We don't have divergence between the 50-minute world, and this is looking like an impulse and a bull flag. So I don't think it's oversold as yet. I think actually this top will be broken probably one more time. If we then break the top, then we'll have divergence probably between the 50-minute tops. But mind you, if it's a strong trend, which I would not necessarily saying that gold has a strong trend, but if you look at the 15-minute world, it is getting it is gaining some dynamic and some momentum. Then it could also have, you could have double divergence before you really get a bigger retracement. But the single would be the minimum, I would say. So I would expect at this moment, I would not expect the downside. I would definitely expect this top to be broken at one point or another, personally. If I look at the 1-hour chart, then I don't see, well, let's see, we'd have to compare these tops, I guess. We had divergence between these tops, but that was a while ago. Then if we compare these tops, this is actually higher. So we are having higher highs on price and also higher highs on the oscillator. That looks trending to me. So no, I don't see it on the hourly either. But especially the 15, I don't see it either. So I think it's a pretty decent probability that it will move up. How much is the question there, because there could be divergence, so it couldn't be all too much, right? If we put a fib on this upside, all it could go to is, for instance, 1291, and then make another retracement again. You can see price up to the minus 272, then the minus 618 here. Let's see, I had some other questions. Amdadul is asking, is asking me about the euro dollar and dollar yen. By the way, Björn, if you see it differently, if you're using a different oscillator or whatever, or if you are comparing different tops, by all means, let me know which ones, or send me a screenshot, and maybe, the way you see it, when seeing your chart, I would agree with you. But at the moment, I wouldn't see it. Let me say it this way. MACD. Okay. Well, that should be the same, I guess, roughly. Normally, that doesn't have a difference. Is there a difference? Does the MACD show divergence? In my opinion, the euro dollar, I'm not sure how to say it differently, but the euro dollar is in consolidation, basically. And the dollar yen is in a potential bouncing spot for an uptrend, to put it short and sweet, basically. Okay. So that's the summary. So no, the MACD is not showing divergence as well. So yeah, then I would be careful with shorts in that case. Richard is asking, what is the next resistance line in the Aussie 30-minute chart? I don't see any resistance on the 30-minute chart except the bigger top at 90.80. But if you want to know what the targets are, you can always put a fib on this upside. Then we're right at the minus 272 target as we speak. So that could be a resistance level. The next one would be the minus 618 at 90.62. Right, so to go back to the euro dollar, yeah, basically it looks very corrective price action at the moment, indeed. and it's pretty rangy on the euro dollar, right? The last few weeks and few months have been just bouncing up and down. The 50 fib, I don't have any 50 fib. What price level is that 50 fib, Richard? So that I have maybe a better understanding. What I have is a 38.2 fib though at 98, which is equal to this top at around 90.80. Otherwise, I don't have a 50. Not if you use the entire daily swing low, swing high. No, what is the price level, I mean? The price itself of that 50 fib. If you put a fib on this very last down move, but then that would be different because then you would be close to, an 886 fib, for instance, right? That we're right here at the 886 fib, by the way, at the minus 272 target Confluence. Will that be a resistance spot? We don't know. It could be. Doesn't have to be though. Price could continue and break through it. $90.50 level. That 90.50. I have no idea which fib you would be using in that case. You must be using, can you tell me the dates of that fib? Because if you use this top and this bottom, then the 50 fib is at 92.09. Oh, you mean literally the price level of 50. Well, those will always have a potential to be a resistance indeed, but I would never target them. Yeah, cheers, Bob. See you soon. So, I mean, technically all those levels could be resistance, but I don't really look at those for my TPs. So there is a bit of smaller resistance indeed maybe there, but primarily I'm looking at either this level or this level. Well, folks, that wraps up today's sessions. Thank you so much for being here. Richard, you do have a good point, by the way. One more thing I wanted to add is that I'm not saying that certain round numbers are more important, right? Like the 90s definitely has more importance, or a parity number, those things definitely. But a quarter, a half, a 3/4, they're like more soft resistances in my opinion. So we'll be back tomorrow on the 12th of February, same time, same place. Hope that you can join us then. Take a look at supply and demand, trading, and other things as well, of course, and see how things have developed in the meantime. So wish you all great trading, and talk to you soon. Cheers.